ツマンおじ今日のニュースを読みます。Reuters China hits EU dairy with tariff, broadening trade conflict. Summary China's duties seen as a retaliation for EU's EU tariff. China imported 589 million of dairy products covered by investigation in 2024. Local Chinese dairy industry faces oversupply and falling prices. December 22. China will impose provisional duties of up to 42.7% on dairy products imported from the European Union, the latest in a series of measures against the EU export, widely seen as a retaliation for the bloc's electric vehicle tariff. The duty to be collected from Tuesday will range from 21.9% to 42.7%, although most companies will pay just under 30%. They target unsweetened milk and cream and freshened processed cheese, including the iconic French Roquefort and Camembert. China's Ministry of Commerce said it had found evidence that EU dairy imports were subsidized and hurting China producers. Unjustified and unwarranted measures. The European Commission, which oversees the EU trade policy, said the investigation was based on questionable allegations and insufficient evidence, and called the measures unjustified and unwarranted. It already lodged a complaint on the World Trade Organization more than a year ago. Right now, the Commission is examining the parliamentary determinations and will provide comments to the Chinese authorities, a spokesperson said, noting that the investigation was set to conclude by February 21. Dairy, a political pawn on EV dispute. Monday's decision is provisional and could be revised when the final ruling is made. China significantly lowered the provisional tariffs on pork in its final decision last week. Trade tensions with the EU erupted in 2023 when the European Commission launched an anti-subsidy investigation into Chinese-made electric vehicles. It imposed tariffs in October 2024. In apparent retaliation, Beijing has imposed measures on imports of EU brandy, pork, and now dairy. Conor Mulvihill, director of Dairy Industry Ireland, said it was frustrating that dairy seemed to be used as a political pawn on the wider EU-China EV dispute. China's Ministry of Commerce said negotiations over the bloc's EV tariffs resumed this month. A senior European diplomat in Beijing said last week that the major issues remained between the two sides. The Commission said it continued to engage with China on the possibility of replacing the EV tariffs with the minimum price commitment, although this price undertaking had to eliminate the harm from the unfair subsidy and be practicable. EU's loss and New Zealand gain. China imported 589 million of dairy products covered by current investigation in 2024, similar to 2023 values. Tom Buijink, a senior dairy specialist Europe and Africa at the Rabobank, said at the 42% tariff would be make export prohibitively expensive, adding that for cheese it was easy to switch to another source. So I think New Zealand will be quite happy with this, he said, adding that French producer will suffer the most. Products listed in the Chinese investigation do not include infant formula, a high-margin business for European exporters. Roughly 60 companies, including Arla Food, owners of brands like Lowpack and Castillo, will pay tariffs between 28.6% to 29.7%. Italy's Sterligada Alimenti SPA will pay the lowest rate of 21.9%. Friesland Campina, facing the highest rate of 42.7%, said it was committed to a constructive dialogue with China's Ministry of Commerce as the investigation continued. Henrik Demholt Jorgensen, CEO of Danish Dairy Board, which represents Arla, expressed hope that matter could be resolved without tariff. The decision is likely to be welcomed by Chinese producers who are grappling with the gluts of milk and falling prices as declining birth rate and more cost-conscious consumer weighs on demand. Shares in Mengniu Dairy Co. briefly jumped at the announcement, although they ended trading on Monday barely changed. Rabobank's Weijing said that China has been declining milk prices for the past 3 years, unlike the rest of the world, and there is likely to be considerable pressure to put in place measures. China, the world's third largest milk producer, urged producers last year to rein in output and cull older and less productive cows. 以上です。